Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because contrary to popular belief, Bitcoin shakeouts are normal and our bullish market structure is still intact. You can see that very clearly here on the weekly chart. We have a high, a low, a higher low, another higher high, and now we're trying to put in another higher low. But what makes these corrections and shakeouts difficult is there's always a bearish narrative that goes along with it. As of right now, it's the labor market data revisions we've seen recently, as well as some tariff escalations, just like we had World War III fears back in June of this year, and the original tariff drama that made everybody think markets were going to collapse back in March and April. And last year in August, we had the Japanese yen carry trade implosion, which convinced everybody markets were going to drop a lot lower. In January of 2024, we had the grayscale unlocks once the ETFs were approved, and everybody was convinced that hundreds of thousands of Bitcoin were going to be dumped on the open market. Even going back to 2023, we had the SEC going after Coinbase and Binance, and everybody was convinced this industry was done for. And in March of 2023, that early in the cycle, we had the banking crisis that convinced everybody that it was 2008 all over again, and markets were going to drop a lot lower. But every single one of those times, those bearish narratives ended up marking a local bottom. And that's why, although it's useful to follow narratives, price action and market structure is what's most important to know when the top is in and when it's time to actually be concerned. But if there's one thing these bearish narratives are great at, it's fully resetting market sentiment. We now have the fear and greed index almost dead center in the neutral region at about 48, even though Bitcoin is trading above $110,000. And you can see the cyclicality of market sentiment this entire market cycle so clearly here. We go from fear to greed, back to fear, back to greed, back to fear, greed, and now we're back in the neutral region and have fully cooled off that overheated market sentiment we saw a few weeks ago when Bitcoin briefly traded above 120,000. And last but certainly not least, we finally filled the CME gap that's been open for a few weeks now. In case some of you aren't aware, we have a Bitcoin CME futures exchange where a lot of institutions trade Bitcoin futures, but because it is only open during regular market hours and not 24/7 like Bitcoin, we end up having these gaps on the chart where Bitcoin rallies higher over the weekend, and by the time the market opens, that gap is left behind. We came back and refilled it after the election when Bitcoin left behind that gap in November, and we also left a gap behind earlier in July when Bitcoin pumped over the weekend, and we just came back down and filled that gap, so that now gives Bitcoin the room to rally higher. And now these gaps aren't some magical indicator that we can 100% bet on being filled immediately, but it usually increases the odds of a correction as the price goes back to fill in that gap. So for me, I believe it's very likely that Bitcoin has already bottomed within this region. We're still holding above our previous high and maintaining market structure. We fully reset sentiment and we filled that CME gap. It is possible that we fall lower and retest the 50-week moving average, which has been our macro support this entire cycle. But unless there's some crazy headline, I don't think we should see Bitcoin fall back below 110,000 on a weekly closing basis. So for me, my expectation for August remains unchanged. I do believe we will end the month of August higher than where we are currently trading, and this was just an early in the month shakeout. And whether the cycle can actually carry on into Q4 of this year or even Q1 of 2026, that's going to depend very highly on the data we see between now and then. And as I said in the free weekly report that comes out every Monday, I made no changes to my portfolio this week because I felt very comfortable with my positioning. My cash position is keeping me incredibly calm during this brief shakeout we're facing right now, but I still have plenty of upside exposure in case price does end up recovering incredibly quickly and re-entering price discovery. And it's crazy to think that just a week before that, I talked about a decent chunk of profits that I took on Ethereum, and it was incredibly difficult to do because at the time when I took those profits, price had been skyrocketing. But now that Ethereum has dropped a bit lower temporarily, it feels good to have taken those profits when Ethereum was trading quite a bit higher. And as always, if you're interested in my portfolio automation system or mental models I use to navigate this market or common mistakes I see so many investors constantly making that can easily be avoided, you can check out the Crypto Enjoyers program in the video description. But for now, we do have Bitcoin back in the middle of the expensive region, and I still believe we're going to trade in the very expensive region in the very near future. And these price levels do move up as the 200-week moving average does. And although I still have pretty high conviction that Bitcoin is headed higher, I know investors have a lot of reasons to be fearful right now. For one, August is off to a rough start, and many people are concerned it's going to be a red month instead of following that post-halving year pattern we've been discussing, but I still think it's going to be a green month. I know a lot of people are concerned 123K was the top because of the bearish divergences we see on the RSI. But it's important to remember these divergences take a very long time to play out. For example, we already had a bearish divergence from the March 2024 top over to the November 2024 top, and many investors sold everything and called for the top to be in. But now we have another lower high on the RSI, and price made another higher high. So these divergences can carry on for a lot longer than most investors can remain solvent. So I like to look at them for confluence, but I don't think full investment decisions can be made based off just this one indicator. And like Arthur Hayes said recently, there's a lot of macro headwinds to be concerned about right now and causing a lot of investors to panic out of markets, similar to many of the macro headwinds we faced this entire cycle. There's people concerned about tariffs. There's people concerned about the sluggish credit market, slowed job creation, which we'll talk about a bit later. But there's always something to be fearful about in markets, and we just have to have a plan that allows us to manage our risk and navigate that fear. We also have Bitcoin ETFs seeing their second largest outflow ever, and the Ethereum ETFs ending their 20-day streak. And you can see this pretty big outflow recently, but we've also seen big outflows in the past. And you can't have billions and billions of dollars in inflows without eventually seeing some profit taking, some panic selling, and some outflows as well. Because I know a lot of people believe these ETFs are only being purchased and held by institutions and very wealthy players, but there's a lot of retail investors involved in these ETFs as well. And they're going to panic sell their ETF holdings just like they would panic sell their Bitcoin on an exchange. So because of all these bearish narratives and the confusing seasonality and the confusing divergences that have been showing very concerning signs for months now, yet price continues to go higher, I like to focus primarily on price action, and I like to have a very clear invalidation that will act as a major warning sign that something isn't right. And for me, that invalidation is our breakout level of our previous range at 110,000. If Bitcoin is closing weekly candles above that level, anything is just a leverage washout in my opinion. If we get a weekly close below there, we can talk about major warning signs and the risk that perhaps a major top could be in. But the good news is that we're still seeing plenty of corporate treasuries raising money to buy more Bitcoin, so I don't think the market is going to let them buy at a discount for too long. We see Strategy expanding their offering, we see Metaplanet expanding their offerings as well, so I still believe this trend and narrative has longer to go. We just need the macro uncertainty to calm down a little bit. As for Ethereum, we are holding the range mid for now, and although I'm sure many leverage traders got wrecked on this correction compared to the rally that came before it, it looks like a very healthy pullback and leverage washout. And like I said in my last video, any price action in this range is just leverage getting liquidated before Ethereum breaks above 4,000 and heads towards all-time highs. We've watched the Ethereum ETFs bring in an insane $5.4 billion over the 20-day streak it just experienced, and the recent outflows we just saw are nothing compared to the inflows that preceded it. And similar to Bitcoin, I just think it's some retail panic selling and some profit taking by investors. SharpLink is still buying tens of millions of dollars of Ethereum, and this narrative should continue to put upward pressure on price. The SEC is still rolling out more regulatory clarity and saying things that we couldn't have imagined them saying even a few years ago, when this entire industry was essentially illegal. And we're still seeing projects like Ethereum and Solana benefiting from major stablecoin expansion, and all major institutions like Visa, MasterCard, the major banks, talking about how they're going to be implementing stablecoins and the insane demand we're seeing for stablecoins globally. Ethereum still looks quite strong on its Bitcoin pair. We bottomed, we had a spike, a brief correction, another spike, and now we're seeing another brief correction. And I still expect Ethereum to outperform Bitcoin over the remainder of the year. As for Solana, not quite as strong, but is holding our major level that we were eyeing at the range mid. We really want to see Solana hold here and break higher. We don't want to see a breakdown of that range mid because that would be a major sign of weakness. But based on where Ethereum and Bitcoin are sitting on their support levels, I think there's a high likelihood Solana holds its support level as well. As for Solana Bitcoin, not really doing much, mostly going sideways and trying to maintain its higher low structure, which it is continuing to do for now. And taking a look at the past year of performance against our S&P 500 benchmark, Solana and Ethereum were briefly above it, but are now back below it. But I do expect them to close quite a bit above where the S&P 500 is over the next few months, and even perhaps surpassing Bitcoin's 1-year performance. And a lot of that is going to come down to Bitcoin maintaining its higher low and continuing to rally higher throughout August and into early September, which is exactly what the global liquidity index is calling for based on the 75-day lag we've been watching for almost this entire cycle. Global liquidity is clearly in a downtrend right now, but if the pattern repeats, we shouldn't see that impact Bitcoin significantly until about mid-September. And again, this isn't an exact science. I don't use this indicator for specific price targets. I just use it for a general idea of trend, and the timing has worked out quite well for us so far. So we'll see if it continues working, because it does agree with my thesis that we're going to rally into the first rate cut, which as of right now is expected in September based on recent data. The global liquidity index is in a downtrend thanks to the recent uptrend and strength we've seen in the US dollar index. Before Friday's unemployment data, the market had started to give up on a rate cut in September, and we were only expecting one rate cut for the remainder of 2025. But after Friday's labor market data, we now have an 80% chance of a rate cut in September, and then we're expecting another one in October and another one in December as well. So these rate cuts being priced in now should be a nice tailwind for risk assets, and we'll see what happens once those rate cuts actually happen and whether or not they end up acting as a sell the news event, because markets priced them in well before they happened and markets rallied into them. The recent weakness in the labor market might also put some pressure on the Fed to finally end quantitative tightening as well, because we did see the unemployment rate tick back up to 4.2%, and it's only a matter of time before it breaks out to new highs for the cycle. But what really ended up spooking investors on Friday is that although we haven't seen a big spike in layoffs or initial jobless claims, we have seen a big drop in new jobs created via the non-farm payrolls, and some of the previous prints that didn't look too bad initially ended up getting revised lower, which really spooked markets, because now we are really close to zero new jobs created month over month, and usually that's a pretty big warning sign that recession is around the corner, and this should put quite a bit of pressure on the Fed to cut rates sooner. But we know inflation being stubborn has been an issue, so they're not going to be able to cut rates that aggressively unless the inflation data keeps giving them more room to do so. And we know that growth is still positive, but we're going to see how this number changes now that we have that new labor market data, and now that there's clear signs that although the economy isn't fully falling apart yet, it is definitely slowing down. Perhaps the most concerning thing on the macro side is the bearish engulfing candle we see on the S&P 500. That's when the candle trades above the previous week and ends up closing below it. We also saw it right below the tariff sell-off. We also saw it right below the July sell-off. We also saw it at the 2021 top in December or early January. So it's usually a pretty good sign that a correction is coming. It doesn't have to mean that, but that's usually what comes out of it. So it'll be interesting to see if the S&P 500 will be dragging Bitcoin down with it, or whether Bitcoin will be able to hold strong, or even if the S&P 500 can end up putting a recovery in next week. But we're going to have to monitor on whether we get continuation off that bearish engulfing candle or whether price recovers. But as we look forward, the federal government is still running huge deficits. That trend seems to be worsening and not getting better. And exponential debt growth means exponential money supply growth, which devalues the fiat currency that we price our risk assets like the S&P 500 in. So it usually ends up being a tailwind for our risk assets like the S&P 500 and our fixed supply risk assets like Bitcoin. But as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.